Hey everybody, and welcome to the PlantStock channel. If we haven't met yet, my name is Jesse, and on this channel we focus mainly on the plant-based sector and industry and plant-based stocks. And today I thought we should take a look at a video that just came out a couple of days ago from Yahoo Finance, where they actually interviewed someone from Bloomberg who's supposed to be an expert on the plant-based sector, and they're talking about why it's going so well, why this is a paradigm shift, and why different companies actually move into this sector, and that they do expect this sector to be worth about $160 billion before 2030. So I thought it would be interesting to hear what they say about that, and I will react a little regarding this, talking about different plant-based companies. So let's take a look at it. And by the way, as always, I would truly appreciate an early thumbs up to help spread the video to more people out there. And if you haven't subscribed to this channel yet, think about doing so if you are interested in companies like Tattooed Chef, Beyond Meat, OTLY, and the Very Good Food Company, to name a few. And don't forget to push that bell button so you'll be notified when I'm actually making videos. Thank you, folks. Truly appreciate your help.
The popularity of plant-based food products has grown over the last few years thanks to the success of companies like Impossible Burger and Beyond Meat. And a new report from Bloomberg Intelligence projects that the plant-based food product industry could hit $162 billion by the end of the decade. Joining me to break down all the latest findings is Jennifer Bartashis. She's the senior analyst with Bloomberg Intelligence. So Jennifer, tell us, we see the industry is really poised for a lot of growth over the next few years. What are some of the key catalysts that will be driving this?
Well, there really are a couple of catalysts that we think are just going to propel growth. And for our forecast, we're looking at plant-based foods as including both meat alternatives as well as dairy and other alternatives as well, to get to that $162 billion. But in terms of catalysts, there are a couple of things. One of them is that prices are becoming closer in line with conventional proteins. And the more that we reach what we call price parity, the easier it is for consumers to buy those products on a regular basis. It makes them less of a luxury item, and becomes something that is a repeatable purchase.
So that is also something we talked about many times on this channel, that's going to be a game changer for especially Beyond Meat, but others plant-based companies as well, if they can reach price parity. And that is what Ethan Brown from Beyond Meat has been focusing on now for several years. And I think we're like 2.5 years away from that project of actually reaching price parity or even a cheaper product than the conventional meat. And again, as I talked about, that's going to be the game changer. But also in the dairy sector, like Oatly, when they're starting to make dairy products that are as cheap as conventional milk, yeah, it's going to change the whole industry for sure. And I also think companies like the Tattooed Chef, they don't have mainly meat alternatives. I mean, there are a whole range of products that they have, but I think if they can get down their products too, when it comes to price becoming cheaper, and I think they will with time, because as we know, they have an integrated business, right? A vertically integrated business, which means they control all aspects of the production and the sales and driving out to customers, which means that with time, I think we can see those prices going down too. So I think for Tattooed Chef, it's going to be really good too.
Ever been in before. Increase of these products in terms of distribution. So they're in more stores than they've ever been in before, and where they're placed in the grocery store. So a lot of these products are now directly next to the conventional products. So when consumers are shopping for meat or for milk or for ice cream, they see these alternative plant-based products directly next to them, and it becomes easier for them to buy those products when they're in stores, versus having them tucked away in their own little corner of kind of a specialty item area. And then from a business side, when you look at companies like Beyond Meat or Impossible Foods or Oatly or some of these growing companies, they're going to continue to gain scale, and they're going to become much more efficient in their operations. So the ability to produce these goods is getting better and better, which also helps bring down cost, and it helps make it easier for customers to reach it.
And that is one of the huge things for Beyond Meat. Unlike a lot of other plant-based companies out there, that for years actually Beyond Meat has had it as a strategy to place their products just beside ordinary meat. I can see it in the stores here in Sweden, and when you take a look at their packaging, right, it just says Beyond Meat. If you're not familiar with the brand, you could think directly like, Beyond Meat. It's like so good that it's beyond the typical meat, right? And it actually, the patties, they actually do look like real traditional meat. And I think it's been working really well for them. And I see that that is something that Oatly should do too. I haven't seen that in Sweden as of yet, actually. Oatly is usually placed when it comes to plant-based alternatives or alternatives. So I think if they would do that more, and they might be doing that in the US, that's going to benefit them more and more too. When it comes to Tattoo Chef, I've seen a lot of pictures from different freezers in the US, and it does seem that usually there's a lot of their typical plant-based alternatives where they have plant-based meat in it are usually placed in sections that are traditionally for vegetarians or vegans, right? But they do have a lot of products that you don't think about being typically plant-based, right? Ordinary vegetables. And I imagine, and folks, if you know, please let me know down in the comments. We don't have it in Sweden yet, so I've never seen that in the stores. They're probably placed in the ordinary vegetable section. And if that's the case, people will take those products no matter what. And that might be something that the Tattoo Chef should be thinking about in the future, right?
Because that is a place where a lot of people can, at a very low risk, try some of these products for the first time. And when they have a positive experience, it's easier for them to then incorporate that into their food at home preparation as well.
Yeah, and as you mentioned, is such a big key in really getting the adoption numbers up in this industry is to achieve that price parity. And as you said before, we've seen startups like Impossible and Beyond enter the market, but we would also see the entry of some of these legacy names like Tyson and Nestle really adding to their product lines. Can you talk a little bit about maybe the interplay there and how the industry is really looking to implement to achieve scale and really drive down those costs?
Well, the entry of these big packaged food companies into the alternative protein space is actually very important for the growth of the industry. And it is part of what gives it that sense that this is not a fad, that this is something that will be around for a while because these bigger companies are investing in these platforms.
Definitely.
But when you talk about Tyson or Kellogg or Conagra, any of these big companies, Kraft Heinz, there's an appeal to them because this is a growth area. When you compare that to the product lines that a lot of these companies produce, they're slower growth in terms of their portfolio. So this is a way to tap into a higher growth segment for them. But because these companies all already have huge distribution networks, it's very easy for them to take these new products and get them into stores. So a great example would be Tyson with its Raised and Rooted line. Because Tyson already sells to virtually every retailer out there, adding a new product into that distribution goes very quickly. And it really enables that part of the scale up that I was talking about of making products across the board much more accessible to consumers.
And I think it's good that she brings this up, right? Because I know a lot of people do worry a lot about Conagra Foods, Tyson Foods, typical food companies that normally has a lot of meat products and dairy products, that they're going to be a threat to pure plays like Beyond Meat or like Oatly, or maybe also like when it comes to Tattooed Chef to some extent. And I don't agree with that because I think one of the reasons is that they're not experts in this field. It's kind of like Tesla. I've talked about it many times on this channel. A lot of people were worried for the last 3, 4, 5 years that when the legacy car makers starts moving into the electric space, they're just going to take over. They already have their distribution, they already have the capital. But they haven't been focusing on that for very long, have they? And they don't put a lot of effort into it. But companies like Beyond Meat and Oatly and the Tattoo Chef, that's what they breed. Plant-based food is what they breed. That's what they wake up. That's what they think about. That's what they're doing. They have, hundreds and hundreds of experts working it, especially Beyond Meat. As we know, I think they have about 200 scientists that's basically working with this year to year, and they're employing more and more people. And we see a lot of scientists in Oatly as well. And we know the kind of magic that Sarah Galetti can do for the tattooed chef. So I would say if you're doing this and you've been doing this for years, like several of these companies have, right? Like Beyond Meat has been doing this for 11, 12 years. OTLY has been doing this for 25 years. And Sarah Galetti has been working with us, I think, for 4 or 5 years. And that gives you an edge, right? That is what you're all about. And I think that's something what people forget. And also, another thing is that when it comes to woke washing, we've talked about this. When companies that normally destroy the environment in a lot of different ways, like old companies, and all of a sudden they buy a smaller companies and say, oh, we're all about the environment. But people today, they're not stupid. Gen Zs and millennials, they're going to see this. They're going to understand this, right? So I think they'll probably prefer the pure plays who actually just think about the environment and the health for people. So I think that's going to make a big difference in the long term.
It is a growth market. It's a growth product. And, a lot of our investors have been really interested in following names like Beyond Meat over the last year, which performed really well in 2020. But, as we look at some of these pure play stocks in 2021, they seem either to be kind of stalling out or moving sideways a little bit. Can you talk a little bit about the disconnect there and, where the industry is right now in its maturity?
Yeah, the industry is very young still, and really hasn't hit its maturity curve at all. And when you look at these pure plays, I think part of the temperamental attitude towards them really swings from the fact that these companies at this point are not focused on profit. And so when it comes to earnings cycles and the reporting of earnings, you look at companies like Beyond Meat or OTLY, and the message is we're continuing to invest in R&D. We're continuing to invest in the development of products, not in focusing on delivering profit to investors. And so there are expectations for significant growth, and we see top line growth actually coming through on a full year basis. But when it comes to investor expectations for returns, right now returns come from price appreciation, and that price has been a little bit volatile for some of these pure plays so far this year.
And this is something also talked about a lot, right? And I have to compare it with Tesla because, as you know, I'm heavily invested in Tesla as well. For years and years, the stock stagnated, basically. It was standing still. They weren't making very much money, but they were doing well. They were putting a lot of effort, building the machine that makes the machine, right? A lot of R&D, which meant that when they placed all the positions, and started building those gigafactories, and they're not finished with that, when those start rolling, right, it's just going to be taking over the market completely. And I see this to some extent the same thing with Beyond Meat and OTLY, that their focus these last couple of years is in R&D, right? You care about your product, you're making it as good as possible, right? And then, as we talked about, when you're able to actually scale it in a bigger way, which these two companies are doing, and Tattoo Chef is doing, with 4 facilities, and started to grow more and more, expanding more and more, even going to other countries soon. That's when we see the shift, right? That's when we can see that their revenues really come on faster, and then we can see that stock price moving up. So, but you have to be patient. This is a long-term perspective, right? So if you want to get really great wealth, you have to have that long-term perspective and be patient, because it is the patient people who make the most amount of money, right, in the long term.
Right. And, we've talked about, the plant-based meat category. And as you said, this report was kind of modeled on alternative dairy products. But what are other promising areas of growth that you're seeing in the category, is just as far as just the wealth of different options that are out there?
Well, it's interesting because within alternative meat, I think we've got well-established products with regards to hamburger replacement. We think that chicken is going to be it's the year of the chicken. That's sort of the next wave of products that we're looking at in terms of the plant-based alternatives. And part of that is, if you think about the low-hanging fruit, your typical consumer perceives regular chicken, to be a healthier alternative to regular beef anyway. So it already had a slightly better health profile. So the alternative protein companies going after beef replacement made sense because it's got a bigger potential health benefit claim to it. But now that a lot of those products are established and they're continuing to iterate, but we think that chicken is the next wave, and then seafood will be shortly on the heels of that. But on the other product side, when you talk about dairy or you talk about other products, some of the areas that are still very small, but we think are going to grow very quickly, are things like alternative ice cream. So oat milk based ice cream, soy ice cream, still very small category, but has the potential for a lot of growth. Same for cheese replacements. And another one is eggs. So egg replacement is important, not just for eggs themselves, but if you think about everything that eggs go into. So condiments like mayonnaise or dressings for salads or bakery items. So that's another area that we expect to actually grow very quickly over the next couple of years.
I'm very pleased that she actually says that it's the perceived view that chicken is, a better alternative. And we talked about this on the channel a long time ago, but we know studies that's been made since the 70s when people thought about this and thought that red meat is the worst and chicken is much better, and people started eating way more chicken. And since the 70s, we've had really much worse cases of cancer, right? So I think the studies that was been coming out the last couple of years, people don't really read them very often, I guess, show that there's a really large correlation between heart diseases and cancer, Alzheimer's, when it comes to chicken in itself, right? So chicken alternatives, I do agree with her there. That's going to be a big thing in the next year, the next couple of years, the next decade, because that's been missing out there. There hasn't been any really good alternative. And that's what Beyond Meat is targeting now, right? I think companies that do target that, I actually believe TTCF is working on something there too. But I think that will be a game changer also in many ways. And as we heard her speaking about the dairy alternatives, that's going to be bigger and bigger. OTLY is perfectly placed there, right? And we also know that, by the way, the Very Good Food Company is going to focus more on dairy alternatives also, and they already have cheese alternatives, so they're well placed there. But we do know that Beyond Meat is actually also looking to go into the dairy alternative business to some extent. Looking for a trademark right now, what my understanding is. So I think that could be big for a lot of plant-based companies out there. So if we wrap this up, I would say, $162 billion industry in the next 9 years or 10 years in the next decade. I actually feel that they look at this in the wrong way. I actually think it's a much bigger TAM possibility for a lot of these companies. They talk about like the food industry, like plant-based food is just a niche, right? They are very positive about it, but that's just going to be around that area, and companies are only going to target that. And that's just not true. We know that companies like Beyond Meat are focusing on the $1.4 trillion industry, right? They're not interested in only targeting vegans. They're not interested in that. They're focusing on the pure meat eaters. And I would say this to some extent is true with Oatly as well. They're focusing not on the dairy alternative only. They're focusing on the whole milk industry, which I think is supposed to be around $800 to $900 billion now in the next couple of years. So also the TAM possibilities there are super huge. And then we come to the TTCF company. They're not only targeting the plant-based sector, right? They've been focusing now on the $63 billion frozen section in the US. And the frozen section is not only plant-based food, right? And the same is that they're going to look at larger markets internationally, which is going to be bigger. I think they're talking about $300 to $400 billion in the frozen section. And then they're moving into other categories. So these companies, I would say, they're going to take a lot more of that money. When it comes to $160 billion seems really low. And I think that is because they're focusing too narrowly on only plant-based food. Because there's not only going to be vegans who buy these kinds of food. We know that already. If that was the case, we wouldn't see the kind of revenues we've seen in the last few years. All right, folks, that was it for today. I truly hope you got a lot of value from today's video. And if you did, make sure to smash that like button. And if you want to keep getting more information regarding the plant-based sector or other companies out there, let me know and subscribe to the channel And if you want to be notified, make sure to push that bell button. Thank you, folks. I truly appreciate your help. As always, though, remember, this was not financial advice. These were just my own thoughts and opinions. It's important to do your own due diligence at all times. All right, guys. Hope to see you soon. Peace out.